Hey everybody, it is Sunday, January 12th, 2019. Taking a look at the S&P 500 as we get ready to trade January week 3 already. So we're already on January OPEX week. And remember how you have two different Friday expirations this week for that. One for the monthlies and one for the Friday end of the week, end of the day, regular weeklies. Anyway, here's our roadmap. Here's what happened on Friday. We got our non-farm payrolls number on Friday. It was a little bit of a miss. We had been trading up to a new all-time high overnight. In the early pre-market, we got all the way up to 32.87 on ES, and we fell back down off of that. We tried to start rallying just before the bell, the opening bell, but that was a little bit of a miss on non-farm payrolls, kind of spooked the market, and we pretty much, you can see we opened, we made our high right off of the open, and we just sort of slid down for most of the rest of the day, and we closed not very far off of our low. But here's something to keep in mind. This Thursday's low of day, 32.63. This was gap support to the fill at Wednesday's close. We made a little bit lower low below Thursday's low, but then we rallied back to close above that low at the end of the day. And what's significant about that, between that low and this 32.6130 level, there seems to be a definite buying interest in there. And you can see this on the 5-minute chart. There was no ability to close a 5-minute candle below this 32.61. And I've been watching this level since Wednesday morning. This was our initial high that we made in the morning on Wednesday while we were waiting on Trump to come on and make his address to kind of, give us the lowdown on what was going on, what the U.S. was thinking they were going to do with Iran after those missiles got shot at us Wednesday night into Tuesday night into Wednesday's open. So the market was sort of holding steady here at 31.61, and once he began to give his address, we blew out from underneath this level and rallied up for the rest of the day. Well, here we came back to the scene of the crime basically on Friday and basically held it. So I think that if we come in to the day tomorrow and we're still holding above this 32.61 level, that's it. That's all you're going to get out of this, because we still have that 32.87 to deal with up above. And we really are in the thick of the 80 handle rule thing here. As long as we hold this 32.61 level in here, to 32.60 or so, I suppose if we look a little bit below it here and maybe hold above our old all-time high and our old all-time closing high at 32.57 to 58, that might be a little bit of a stop run effort. But if we reverse in there, that's it. That's all you're going to get out of this quote-unquote sell-off for now, because we have the phase 1 trade deal signing coming up in 2 more days. So the Chinese delegation is going to be, will have been traveling this weekend. I guess they're going to get here tomorrow on Monday, and this signing is supposed to come off on Wednesday. So in any case, if we hold out this level, then obviously we're going to be looking for our halfway back point of Friday's range, because we put in quite a wide range on Friday. We'll look for the halfway back point for that to break out, and if that does, then we're going to go revisit the high, and then we've got that ES 32.87 high to resolve. And I'm telling you, if we get up there, we're going to be going up above 3,300 before the week is out. Okay, now what happens if we come in and we, have a gap down open on Monday morning with the S&P? Well, our 10-day simple moving average is moving up pretty quick. It's going to be right in here in the low 32.50s. So we're going to have to come down and we're going to have to test that 32.50 handle and the 10-day simple moving average. Problem is that you can see that all of our little bit of sell programs that have happened since the start of the year, basically ever since the 31st on New Year's Eve, we've had no problems breaking down below this 10-day simple moving average. So this is not as steady of a line of support as it has been for us in the past. The only thing I will say is that even here on this day here, this was Friday, Thursday, Wednesday, this was last Tuesday, we broke down below the 10-day, but we managed to crank it back and close above the 10-day. So that is the one little characteristic that you got to look for in this, that if we do have a sell-off tomorrow and we break down through the 10-day simple moving average, as long as we reverse and close back above it, then we've got probably 3 more days of upside to follow after that, because that seems to be the pattern. We bust down through the 10-day, it gets bought, and we come back up. So if there is further downside, like I said, we'll be looking for that 3250 handle and the 10-day simple moving average, and we may test lower. We may even test as deep down as the 20-day simple moving average, but look for a reversal and a close back above the 10-day simple moving average before the end of the day. And if that doesn't happen, that is a change in trends, because all of these breaks of the 10-day have all reversed and gotten to enough of a buy program to be able to close back above it by the end of the day. Okay, I hope that gives you at least a little bit of a good start. I don't think that we're going to be seeing a big sell-off before that trade deal is signed. I think that Friday's probably going to end up being an anomaly, maybe a little bit more downside, but a reversal, and then we're probably going to be up Tuesday and Wednesday, and then after that trade deal is signed, then we might see a deeper pullback happen. Okay, that's it. Have a great rest of your Sunday. As always, good luck and good trading.